the U.S. government is a $3.7 trillion, almost $4 trillion enterprise. We're talking about swings of $4 to $6 billion. Very small changes, because when we hit the limit and can't borrow anymore, we're operating on a cash basis. It means we have to have enough money every day to pay the current day's bills, but also the next day's bills.
That is Treasury Secretary Jack Lew laying it out. The reason he sounded the alarm yesterday to members of Congress that the U.S. government will run out of money to pay its bills 2 days sooner than thought. The new date, November 3rd, is now when he says we'll hit our borrowing limit. He spoke to me exclusively right here on Fox Business, and we pushed him on what happens if the government actually hits the debt ceiling and why he is not in the business of prioritizing, meaning picking and choosing which of the 80 million transactions the government pays out every month. If we get too close to the limit, Congress is in a steel cage deathmatch mode. What happens to your money in the markets? Here to decipher and dissect three of Jack Lew's most important points made in our interview, I'm joined now by Chris Bertelsen. He's Chief Investment Officer at Global Financial Private Capital. He's ready. He manages more than $5 billion. And Drew Matus, he's Deputy Chief U.S. Economist at UBS. Great to have you both. Let's get to this one first. The so-called business of prioritizing. Jack Lew says he can't do it. You know, you have a lot of people saying, well, if we hit the debt ceiling, can we preserve our cash by picking and choosing? I asked him that. Here's what he said, and then I'll have you guys react.
We don't have the capacity to pick and choose. We'll pay this bill and not that bill. The systems weren't set up for that purpose. I think it's a mistake to go down this road of asking what can you pay and what can't you pay. Because fundamentally, at the moment when you choose not to pay one set of bills, what you're saying is the United States government can't be trusted to pay those bills on time. That's a terrible thing.
Drew Matus, there are a lot of bills coming in and out. Which one matters the most? And can they not pick that one out and pay that one?
Well, the ones that matter the most are the interest on the debt. So you'd want to prioritize those if it was possible. I think it's an open question about whether that is in fact possible. I do think Treasury Secretary Lew has every incentive to say it's not possible, but I think if push came to shove, they would try to do it.
They would try to do it. Chris, what do you think? Can he pick and choose, and is that really the way to go, or does Congress need to act on this thing and move it?
I pretty much agree with Jack on that. I think Drew is right. You probably could single out some things, and the interest is the most important. But really, the last thing I think the country needs or the market needs is a 2013 debt fight again.
Well, let me tell you, at this moment, the market is jumping. We have the Dow up 64 points. I'm thinking it may have been Loretta Mester of the Cleveland Fed possibly saying we need to raise rates now and by a quarter of a point, nothing less. But back to Jack Lew, you're talking about this steel cage death match we talked about, and it's really right now a lot of question about what's going on the Republican side. They do not have a Speaker of the House candidate at the moment because Kevin McCarthy backed out of it. But the next speaker, no doubt, will want to extract spending cuts for raising the debt ceiling. Here's what he said about negotiating with Republicans. This is interesting. Listen carefully.
We have made clear that we are not going to allow the ability to pay our bills to be used as a kind of leverage to extract policy concessions that are otherwise unacceptable. Now, if Congress chooses to combine the debt limit with other things that are mutually acceptable, we've always said that's a different story.
Drew, a little wiggle room there. What do you think?
Well, I think so. I mean, I think if you look at the past couple of issues with the debt ceiling, we've come away with some spending cuts and we've come away with some concessions. So you can say that it doesn't work, but it has tended to work. And we've seen that in the most recent deficit numbers, which suggested the U.S. budget deficit's actually pretty well contained as a percentage of overall growth.
Chris, it's not unprecedented to pair spending cuts with raising the debt ceiling. It was done under President Reagan, done under President Clinton. But by the way, we should say since President Reagan, we have raised the debt ceiling 49 times.
Yes.
Many of those times with a clean bill, no strings attached. Here on the screen, Reagan did it 18 times with Congress, of course. President Obama 9, President Clinton 6, Herbert Walker Bush 9 times. So what do you think here? Is there wiggle room for negotiation with the Republicans?
Absolutely, Liz. I think it was a great interview, and it showed that the administration doesn't want to take all the blame for something. I look at it as more of a political statement, but there is some room.
There is some room. Okay, and finally, the U.S. dollar. The Treasury always says we believe in a strong U.S. dollar, but then they maybe act a little differently. I pressured him. The dollar is so strong, it's starting to affect the earnings of a lot of companies out there, Walmart just being the latest one to cite the strong dollar as a problem. Here's what Jack Lew said about intervening to perhaps weaken the dollar at some point. You got to decipher this.
What we can't tolerate is if countries take steps to gain unfair advantage to devalue their currencies, and we're very aggressive pushing back on anything that looks like that.
So you're saying no intervention to slightly weaken the dollar or slow down its march to strength?
You know, we have had a pretty consistent message around the world to other countries not to devalue their currencies, not to get into a competitive devaluation, that's both unfair and dangerous to the global economy.
But, Drew, are there other ways to slow down the stronger march of the dollar?
There are, and you're seeing them. You're seeing a lot of other countries' central banks actually cut rates or engage in quantitative easing, and that has the same effect as effective intervention.
Well, what about Treasury? Can Treasury do something? Can they sell a few dollars on the market quietly? Listen, I could be completely way off on that, but he kept saying we believe in a strong economy. He didn't say strong dollar.
Well, so they have actually limited ability to do it, and anything that they would have to do, the first thing the market would look for would be to see whether or not the Federal Reserve had actually participated in the action, and that would seem very unlikely.
Chris, can the Treasury or should the Treasury weaken the dollar?
I don't think so. I think it was a little bit of a shot at China and Walmart's problems specific to Walmart.
Yeah.
I think you've seen our economy do very well, 80s and 90s under a strong dollar, and I'm confident that excuses by management on missing because of weak currency are getting old.
Hey, it's great to have both of you. Chris, Drew, please come back. Thank you so much for joining us.